Hello, traders. It's 8:03 a.m. Chicago time. I might be coming across too loud here. Let me turn this down. It's 8:03 a.m. Chicago time on the 7th of January 2021. Welcome to Thursday. This is episode number 1912. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please give me an indication on whether or not I'm blowing out your speakers, not too loud, and so on. Let's move right into the summary sheet. Let's pull that up here. All right. So here's our conversion trading pre-market summary sheet. This gives us a recap of the overnight session, which helps us set the tone or the discussion in terms of what to expect today. A lot of what happens overnight carries over into the day session, and this is why this is important. It also tells us what to pay attention to for the day. Sorry about blowing out your headset, your speakers, your headphones. It was set too high. I was recording a video yesterday and it was set too high. So hopefully now it's better. So allocation this morning is to risk. The overnight inventory is about 82.7%, about at this point 85% long. We're staying above yesterday's close, the pit session close. The range today is 31.25 points. Let me check that. Double check that here real quick. Yeah, 31.25 points. The overall pattern overnight, the condition overnight is balanced after pushing higher. Remember, we sold off on the close or in the afternoon yesterday, following the basically the riot or push into the U.S. Capitol, which took everyone by surprise, including U.S. Capitol Police, I think. And this overnight volumes now are 223,000, which is slightly heavier than expected, but well within the normal range. Normal range is up to 398,000. The mode's 296, but that includes some very heavy volume nights from earlier last year. I have to remember, 2020 is last year. Although it feels like December 38th today, like last year just didn't come to an end, as if the end of the year is going to change anything. New beginnings, I guess. Of course, the range is well within expectation. The mode for that is 30 points. And we are considered normal up to 50 points. Today, what's driving the market? Well, we've got officially President-elect Biden confirmed by Congress as the next president, along with Senator Kamala Harris. And we still have this issue of a civil unrest, the death of, I believe, 4 people as part of this riot. And then we still have the situation with COVID, where vaccines are not being distributed as fluidly and efficiently as expected. 20 million, I believe, were expected to be vaccinated by the end of 2020, and only 4 million have gotten it in the U.S., not to mention what's going on in other countries. So again, Congress certifies Biden. There's still this issue, this tension between U.S. and China on tech companies, especially those involved with military contracts, and so on and so forth. The tech sector has been weak. It ended up rallying yesterday, but it's still kind of heavy. Coming into today, we did have, this morning, we had initial claims which came in quite a bit better than expected. Initial jobless claims came in at 787 versus 800,000 expected, so slightly better. Fed's Harker speaking currently. We did get balance of trade, which came in worse, $68.1 billion deficit versus 65 expected, and that's where we are. Going forward, we have ISM services or ISM non-manufacturing at 10 Eastern, Feds Bullard's at noon Eastern, and Feds Evans at 1 Eastern, and that's where we stand. Looking at yesterday's action, again, what is going on here? Yeah. Again, we had scenario 3 play out. I posted a tweet yesterday to show, and maybe you didn't see it, maybe you're not on Twitter, but let me display it for a second. I created this not to toot my horn, but to show in real time what the meaning of these of what we're doing here. So here's the expectation. These are the expectations for yesterday. Okay, the primary scenario is a choppy open, push higher into 1450, squeeze, and then continue to squeeze. Looking for to target the 3625 area and install in that area. Secondary is a test down, a drive higher, open test drive higher, and a break of 14 and a half, pull back to 14 and a half right here. So a break of 14 and a half, pull back to 14 and a half, impulse to 36, and then a push to 45 and 47. And what I showed is what actually happened. This is what actually happened. This is what it looks like in real time. We have a pullback, and then we finally get an impulse. As you can see down there, it's hard to see. It's pretty small because this is two 1920 by 1080 screens on top of each other. So it's you got to squint your eyes, put your glasses on or whatever. But you finally have an impulse, and what it does is it pushes through the 1450, nice little pullback, and then continues on just like we would expect. And what I'm highlighting with these arrows here is the turns and the expectations. There it is, stalling in the 36, 37 area, and then there it is, taking a break at the 45, 47. Of course, yesterday pushed through all-time highs and continued higher, but I don't really care. What I care about is the primary target, which is both statistically based and auction based. And the goal here is to explain how these scenarios are supposed to work out. If we see that we break through the 1450, then we're looking to trade the pullback to continue. And if we do, then the areas to pay attention to are 36, these chop areas, 36 and 47. The goal is to hold for the extension, and that's a very, very hard thing to do, by the way, in trading. It's pretty much everybody's problem or hang up is that the winners are not allowed to run and the losses are allowed to hanging on to losses and not letting winners run to compensate for the losses. And creating these plans just helps us keep the big picture in mind without having to flip back and forth to a 60-minute, 120-minute, and then go to the daily and come back and constantly trying to read different time frames. Just come up with a plan, figure out your areas. These are, for me, these are the stock zones. These are key areas to watch. Some are more important than others when they are thick like this. They're quite important. Again, here's the push through 1450, pull back to 1450 before the impulse, and then this is what it actually looked like yesterday. So there's the consolidation in the morning. Hang on, let's roll back. Turn on the stock zones. There's the consolidation in the morning. There's the push into 1450, and then it finally breaks through, and then the opportunity is tough to see. The opportunity is right here, okay? And then what we're looking for is for it to grind into the next area. Remember the 3075, which is the MC point of control. We expect some reaction there, but the bigger reaction is expected at 36, and that's when we're looking for to kind of continue to break as it pushes through. We trade one level at a time. right? We trade one level at a time, and the other thing that's really important to do as a trader is just to accept that it may not work. The first trade yesterday, if you're in a head trader channel in convergent trading, the first trade outlined was the short 1450 right here. That was only good for a return back to the opening swing high. Okay, this why do we even consider a short on a day like yesterday? The short is considered because the open is an open auction in range, in value, so two-way action is expected. It is okay to fade the break into a major area. It may not work. It might break through and take out a stop, which is at the moment, given the current volatility, is about 3.5 points. But here it ended up pulling back and providing two scale outs before the rest had to be given up. And then as soon as it breaks through the 1450 and pulls back, we're stalking now. We're looking for clues as to support at the 1450, resistance turned into support, looking for it to push to 30, 36, 45, 47, giving us the target. Okay, this yesterday ended up pushing to 74, an additional 30 points, but that's not my problem. That's not the issue. The issue is not that, hey, we didn't catch the bottom and we didn't catch the very top. That's not our goal. Our goal is just to create and follow a plan. I'll get off my high horse here. Yesterday, action, positive, delta, positive, pretty good lifting yesterday. Note the rotations early on. The big rotations are all positive. The negative rotations were very, very small. Look at those negative rotations. They didn't even breach the red line, which is the impulse line on a rotation. Remember, rotations are everything, right? Rotations tell us the condition of the market, how well it's moving. And so we could see early on that it's really the positive rotations are quite strong. This makes the short at 1450 early more risky, so you have to tighten your scale outs, make sure you secure your risk or fund the trade or finance the trade early. But otherwise, the rest of the time it's longs only. Longs only until when? Until we get this. Once we get this is the news of the break into the U.S. Capitol, shots fired, and so on and so forth. And now we get rotation extension down. This is when you back off the gas on the buy side and start looking for areas to the short side. Areas to the short side, again, you trade the stock zones, you trade the structure. This didn't quite move up high enough to catch the other side, and then it pulls back. Despite the fact that it dropped about 30 points, it stopped right on the prior week's close to the tick, almost 47.75 versus 47 and a quarter, which is supported by VWAP for a quick pop. Well structured trading, a well structured market. On a side note, and I know I'm getting a little long in the tooth here with this discussion, but my goal is to impress upon you the importance of structure and the importance of a process that we follow. Those who've been following for the last 10 years that I've been doing these, 6 or 7 years, I guess, since 2013, that I've been doing these trader bites, you probably noticed that I'm following the exact same process in the trader bites. Doing the homework follows the exact same process. This process has been in place for 15 years when I turned from a high volume, high activity scalper to a structured trader, which was a very tough transition. I've been following the same process. I haven't had to buy a new indicator. I haven't had to buy a new course. I haven't had to do anything other than to follow the auction and refine and learn from others, which again, what convergent trading is all about. Not that I want to give that a plug, but that's the whole point. It gives me an opportunity to connect with others and talk to others and see what others are doing. And that's how we continue to develop and grow as a trader, in my opinion. Okay. So that's that. There's a lot of commentary that with the turmoil in the U.S. Capitol, the seat of democracy. I don't know why we call it the seat of democracy, but well, I know why, but it's there are a lot of democracies around the planet, but people are saying, well, with the rioting and with the looting and with the jobless and all this stuff, the markets are making that's bullish. This is all bullish, sarcastically. And I've got to remind everyone here to not listen to what's going on there. Yes, the news has an impact. The news definitely has an impact on pricing. The market is a machine that is honed and tuned towards exploiting opportunity in the form of greed and exploiting and then protecting assets in terms of risk control. And that's so the news is important. I always trade with a news feed, but don't read into this, COVID is this and that, and how are we at these new all time highs? The stock market does not represent the economy directly. The stock market represents the stocks in that economy. Even when the economy's tanking, there are stocks. There are stocks that are making new all time highs. There are stocks that benefit from a market that is bearish, or an economy that is falling apart. There are stocks that benefit from this, and we're trading the stocks. We're not trading the economy. We're not trading that. There's an influence for sure. I'm not telling you to ignore it, but don't listen to this thing where how could we be up here with COVID, with the divisive politics, with Brexit? We're here because money's got to go somewhere, and there's a lot of it being printed, and it's going into the U.S. market, specifically tech. Tech is carrying about 70 or 80% of the gains in the S&P last year, and techs have been pivotal for COVID-19 in that they facilitated the ability for people to work, to continue a certain lifestyle, and so on. And so they rally. A huge calls being bought in Tesla and other stocks. Amazon's done the best that it's ever done, and those are represented here. So let's stop talking about how the market's disconnected from people's plight and the economy. That's not the market's function. I know it sounds brutal, but that's not the function of the market. This is not why we're here. We're trading the underlying asset in a futures contract to maximize our capital use, and to maximize our leverage, which also brings risk. So pay attention to that. 235,000 traded so far. A balanced profile overnight. Inside of the upper distribution of yesterday's range, we're holding above yesterday's point of control. These are all important factors. We are still holding above the all-time high previously. So what we have not seen is a new high that is sold off, and we fall below the balance point, which at this point is 2730, right? And then below that, 2695. 36.95. So we're holding on to these prices. What does this say to you? What this says is the market is likely to continue higher. The market is still bullish. It is not seeing excess pricing. It's not seeing this as too expensive. If it did, it would be trading way down here. So don't fade the up moves today. Okay, what we had yesterday is an impulse day up. It's not as strong as the impulse day down, but we finished above the 1 Vol Sigma of the prior session. It is technically a day that is outside of normal. That's what the first Sigma says. It's closed outside of normal, and the expectation is it would likely rest up here and then continue to breach for our continuation trade after the impulse. So what it'll look like, what it's expected to look like, come on, clear whiteboard. It's expected to look like is pullback. Remember, we held yesterday's mid too, right there, this blue line. It's still bullish. Consolidate and then squeeze before the next move happens. And the next move may be corrective. I don't know. But overall, the market is not giving up these higher prices. Okay? So that's where we stand today. Anyway, I've gone way over my time here. Let's move on to what's expected for today. Okay, so Takes me a second to set this up. Tricky, tricky, tricky up above. Very tricky trading above us. So what's expected for today? Again, we are above yesterday's point of control. We are above the MC point of control right down here. We are holding above the prior all-time high from mid-December. We are basically above the prior week's close, the prior week's high, and we're holding steady. The expectation this morning is an open auction that reverts back because the overnight inventory is about 85 or so percent long by volume. Expecting it to revert back, and then I'm looking for it to squeeze that high yesterday. Yesterday afternoon, by the way, left a legitimate double TPO high or a double top at the 74. So up here at the 74, 75, we have a weak high. You can see it right there. There's no excess to the volume here. The expectation is it's likely to push through. We have two measured moves just above. We actually tangled with a measured move down here, which is represented right there. We have two measured moves up above, and then I'm looking for it to get a little bit tired and potentially fall back and stay in line. So I'm looking for a profile for for today's session to look like a distribution down below, breaks the high, and then puts a distribution up above and comes back into the middle. That's what I'm looking for as the key play for today. Secondary, open auction, squeezes higher, pushes the high, takes out the double top, hangs out here for a bit, and then we get the sellers start stepping in to take some profits. I don't see a particular reason for this other than tomorrow's non-farm payrolls. And there may be some settling or some balancing before that happens. Not sure, but I'm expecting it to come back into the middle and test all the way through yet to yesterday's point of control before it rests up here. The market has not had a rest day this week at all, basically. I'm expecting today to be a rest day. I'm not going to throw up a third scenario because it is quite unlikely. These are the two main areas. We're looking at 80, 84, potentially squeezing to 95 up here. Otherwise, likely to resist test and fall back through the 74 from yesterday. And then we're looking at 42, and the extended is 30, 30.75. That would be the extended below. Okay, that's a 7 with a dot. Cool. All right. Hopefully you're up to speed. Good luck, and I'll catch you tomorrow. Take care.